Aloha, and thank you for joining me for Java this morning. It is Monday, it's June 10th, 2024. So there is not a lot going on as far as reports or data are concerned, expecting. There's a few very critical things I would like to cover prior to the market open. We always start with our risk indicators. The MMRI is slowly but surely elevating, so we're above 291 at the moment, showing increase in risk ever steadily. So the fear greed index is kind of like the jobs data. It's a tug of war between a couple of different factors. So the number is staying in the neutral zone at 45. However, you dig into the elements that make up the fear greed index, the breadth has gone down, and it's basically momentum only that is holding it in the neutral territory. Otherwise, it would be more on the fear side. And once it hits that direction, it can move much more rapidly. So I'm warning ahead of time. So sentiment right now for the markets is kind of on a hold pattern. It's very mixed. Not a lot of data coming out, as I said today, but there are a few movers. We'll go into those in a moment. So kind of waiting for the market to determine. Anything unopened could be reversed. So we've got what I call unicorns in this market. They could move against them, basically like the meme stocks. Nvidia completed their split today, so they're moving a bit. One thing I would like to talk about a little bit more in a bit is the Fed using lagging data, and I think that could cause trouble here pretty rapidly. So let's take a look at the underlying factors. Is the 10-year yield and the relative strength of the dollar. We always keep an eye on those. Now, those both gained ground, and that kind of crushed the markets a bit for the stocks. We've got cryptocurrencies also under pressure because that dollar gained strength. So as the dollar has more strength, can purchase more, the what seems to be the price in dollars will go down for assets, including Bitcoin, gold. Although oil right now is up, that's on supply and demand. So stocks right now are down, and we've got the futures also putting pressure on these stocks. We've got silver and oil both kind of took a hit last week, and they're recovering from that. Kind of as expected, nothing major at the moment. So I'd like to go into the calendar and earnings. Today's only 3-year note auction. While I watched bond auctions carefully, the 3-year is not really enough of a benchmark, so to speak. It is on the short term, and I'm not expecting a lot of high-end sales or issues with it. Tuesday, we're getting numbers from OPEC talking about oil, and then the 10-year, which I will be watching because the 10-year yield is pretty important to the market. It has gone outside a dependency of the Federal Reserve, so regardless of whether the Fed hikes, now the 10-year yield is moving on its own due to these Treasury sales. So Fed preview for this, as we say, they've got a hawkish turn. They don't want to make rate cuts and are going into a recessionary environment. So that's stagflation, where we've got the economy slowing and going into basically we've got a downturn coming in. So in the market, looking at this, when you look at the currencies, it's the title is How the US is Daring the World to Find a Dollar Alternative. We're going to talk about that a little bit more in a bit. But basically, a lot of the strength that's underlying right now is only because the dollar is still the reserve currency, the US dollar, that is. So on Wednesday, what we're really watching is the Fed decision and then also CPI inflation numbers that come out prior to that, because that will affect basically the sentiment of the market, not so much the numbers. But if the market thinks that the Federal Reserve will cut, it's easy money. The market will basically benefit from that. So what is moving and what's going on, we're going to a couple of the unicorns. The first one is Apple. So they've got their event they're announcing today. They're going into artificial intelligence of their own. Expect that to be positive for the stock. We'll see what happens. We've got the European Central Bank talking about how they must wait for September prior to making their decisions on their next rate cut. And that's because they basically have to move in lockstep with the other central banks. So they say they don't coordinate, but they do. So basically, they're going to see how things kind of work out with this prior to making their decision for September. So we have got stocks, part of why they're going down. There's a lot of political turmoil going on over in Europe. There were the elections, and we can talk about that a little bit more in a bit. We've also got the NVIDIA split, that 10 for 1. So that's hitting today. That's going to be pretty huge. We've got Southwest Airlines. Basically, Elliott is announcing that he's got a large stake of it. The ticker for that is LUV. So that one will probably be a potential mover today as well. And there could be some sympathy moves in the basically other airline stocks as well. For instance, Delta or American Airlines. So let's go into what is going on abroad. Back to the challenge to the United States dollar as far as the reserve currency, we've got BRICS. I spoke about this back for the weekend and then also on Friday. They're talking about their unified payment system, and they're moving closer every day towards this new settlement system, to backstopping it, using it through basically their version of SWIFT. So as this advances, they're trading more in their own native currencies and basically leaving the US dollar out of it. As they do this, the treasuries have less demand, and that is a large part of what's putting pressure on that back end. If people don't understand what is moving these stocks and that pressure in the back end, and why that 10-year yield can move regardless of what the Federal Reserve does, that is a large mover. So we got another story politically again, but it's also moving markets. Uh, Canada's Parliament, basically they've had some reports coming out. They've been accused of treason. Several of their committee basically saying that a lot of documents came out and they are being influenced, a lot of their top people, mostly by China. And then secondly, after China being the main influence, is India. So the Canadian Parliament being heavily influenced by foreign entities, so to speak. This does happen in all nations. However, they just got caught, and the extent of it does make a difference. So with this, let's go into the conflict that's going on around the world. And this is all, large part of this is distraction. And aside from distraction, it's a way for them to ease, basically inflate the money supply, because they don't want you to go against sending these troops or these war funds overseas, because they need them. Basically, they're funding their military industrial complex. So you're watching the larger industrial stocks, such as Raytheon, are benefiting from this. So behind this, the stories coming out. We've got Belarus saying it's joining the nuclear exercises with Russia, launching missiles. And this is because United States is doing ICBM testing again, and then also telling Ukraine that they are allowed to strike within Russian territory. So first, Ukraine warplanes did launch a strike inside Russia. So it's just escalating. They're escalating this distraction. So you've got Germany against the French plans to send soldiers into Ukraine. However, there are already French soldiers, NATO troops, and American troops there. They're quote unquote advisory capacity. So that always happens prior to launching offensive when they want to do this. That's very typical, historically speaking. So what happened with the European elections is really what's happening with what's going on with those markets over there. Macron and Scholz, France and Germany, both got politically hit. So Macron did not take this very well. Marine Le Pen won out with a large popular vote, showing a major shift. And as soon as this happened, he's calling for major emergency elections. It's basically a very poor loser, not accepting, as any good dictator has to stand his ground. So we've got that going on. We've got basically the parties opposing the Russia sanctions uh, are moving up in the European Union elections. So conservative parties gaining a hold. These are the ones that do not want to give the Russian money basically the sanctions and other things to Ukraine. So they're against this, or at least not supporting the rapid expansion. So with this, I want to urge you a caution. If you're in these markets, just watch these initial moves. See how it's taken with the markets. Could move a little bit later today. It should be probably trading within a range today, is my guess, not financial advice. However, I want to wish you all a green trading day if you're trading. And until I see you again, my friends, stay free.